Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone had a great weekend. Shout out to those of you that were with me for the small account growth plan or any size account growth plan class on Saturday. It was a great time. We covered a lot of material. The replay should be available already, if not today. We'll get the slide deck up for you all so everyone can review that at their own pace. But I just want to remind everybody, this is just the beginning of the class. So we'll cover that in a little bit. We are taking a look at the S&P right now. And what do we have here? We need a swig of coffee is what we need. All right. So what we have here is a bit of a bounce since about 5:30 this morning. And you'll see we continue to do something that we've been doing now for a lot of days. This is not bearish. It's certainly more bullish than bearish. It's just not the same quality uptrend that we ended the month of September with. As we're going into October, as we're going into the last quarter of the month, you'll see we just don't have a whole heck of a lot of, as you can see here, new highs. But where is that going to happen, and how would we position ourselves for that particular move? Or when should we reduce our expectation of a certain level holding? Well, what's really interesting is we've got some Darvis-based support, basically about 57.24 on the December contract of the S&P futures. By the way, I do want to mention this because if you are an S&P futures trader, and this is always something that's so fun to think about because it allows traders so many more choices, better choices. And it's kind of on my mind today because right after we finished up the class, we're going to embark on 4 bonus class sessions and 1 extra bonus, which is the SPX session. So this is I'm going to share with everybody what the last 6 months of testing was all about, what I tested, what I found, what the setups are that worked really well in terms of looking at 6 months of SPX setup, how you can do this in a cash account, how a small account, how a small account could do this and do this with fairly little capital. In fact, I tested this in an account of $7,700. How's that for a small account? Wait a minute, I didn't think SPX could trade in a small account. I'll tell you what, when I started the testing 6 months ago, my thought was, let's get this SPX thing off the table once and for all. I'm not an active SPX trader. I prefer to trade the S&P futures. A lot of traders in our room trade the MES. I love trading the SPY ETF. But what about this thing? Is it worth our while? Or is it just kind of this thing where really large accounts can benefit from it? Or it's just sort of a trendy, fatty thing. I really wanted to disprove that, the value of this thing. I really did. That was sort of my hypothesis. And then as I was testing, as I found setups, and then as I found results, I thought, oh, okay, there is a very specific way to do this. It is a merciless symbol, because I will tell you, when you're talking about SPX and 0 days to options SPX, you better get it right. It's like watching those Formula One guys go around the track, that narrow little track in Monaco, and you watch these guys skim the wall by literally less than an inch again and again. And that kind of reminds me of what SPX trading. It is high speed. It is Monaco. It is very small margins of error, but it's doable if you have the patience to wait for when you have an advantage. But the cool thing about looking at the ES is that it gives you, first of all, I'm going to give you all a little bit of a heads up here. It gives you a better and sooner and more organized view of what any version of the S&P is going to be doing, right? So if I'm looking at ES, that's going to track to obviously micro, MES. It's obviously going to track to SPY, but think about what this symbol and this symbol, SPY and SPX, have in common. They're really just a 9:30 to 4 p.m. Eastern conversation. So what about all the other hours where the ES futures are trading nearly 23, it is trading 23 hours a day. And so one of the things that I found is not to get wrapped up in what's happening on the SPX at the bell, not to get wrapped up in actually the chart of the SPX, but rather only the strikes, and to set the thing up using the ES. And those are just some of the things that, I tested for. Actually, we're going into the 7th month. And by the way, I'm going to keep fine tuning and testing. What I found now works really well. And what I found also for those of you that are trading SPX, trade it much more discerningly, trade it less actively. Remember, if you can get 2 to 3 setups on the SPX, where the kind of setup I'm talking about is a move that's going to allow us to take advantage of a very nice appreciation of the option price, not chopping, not selling premium, not needing a margin account. Remember, I put some very specific limitations on the testing: cash account, small account, long calls, long puts, right? So in those confines, I found a lot of interesting setups and some good success. But it really all started with watching this thing, the S&P. All right, so what do we have in the S&P today? Little bit of an uptrend to kick off the morning. In fact, when it comes to an uptrend, we have the NQ moving in an uptrend as well. All right, so Ren's asking, are we going to start trading S&P in the Sector Secrets Mastery? Yeah, we will, Ren, but I'm going to tell you, the Mastery is a live trading room. It's not necessarily, hey, I see this trade, so let me spend 30 minutes explaining why this trade is valid room, right? It's a live trading room. Folks come into that room to go, okay, Rog, what's the trade and how are we going to take it? But that then puts the onus on the members to either follow what I've taught them in terms of position sizing and risk management, which is huge in the S&P, and then be able to take the setup and put it within the proper confines of their account. And that's where a lot of traders, I have a sneeze coming, my morning sneeze. That's where a lot of traders, screw up, right? They risk too much. They put themselves on a path to blow up their accounts. Sometimes they're not trading large enough. They don't realize how much they could buy, right? There were a couple of times in that $7,700 account that I could buy 3 or 4 contracts of SPX. I know. So it just really depends on the understanding. Hi, pup. It depends on the understanding of that risk. And those are things that the class is going to teach. Those are the things that you really need the foundation of what we're doing in the class to be able to take get the most benefit of. But yeah, the short answer is yeah, you bet. We're going to start doing that. But it's not a daily thing. I don't want anyone thinking that they're just going to trade SPX and that'll be it, right? SPX would be a supplement, a powerful one to day trading, to swing trading, right? To even swing trading. And those traders that say, Rog, I would like to day trade less, but continue to swing trade. That's where I've been finding personally, I've been loving SPX because I don't feel the need to day trade every day. I know I'm not going to day trade, but maybe 3 to 4 times a week. And then I really can go very much in a focused way at my swing trades, which have been absolutely, if you take a look at where the growth has come, at least for me, and what I've been sharing with you all in this room or sharing with you all in the webinars, the growth has come from the swings. So let's talk about the NASDAQ. Am I going to be a buyer? Yes, right? Absolutely. Daily price movement range, Darvis level. These are fantastic levels to keep an eye on if you are looking for a bounce. But shouldn't our expectations be a little, at least realistic to the fact that there is resistance up in this area around the daily price movement range and that Darvis? And that's really another thing that choppy market versus trending market expectations are going to adjust. How far could it keep going? Now, I got to tell you, when you look at the daily time frames, I'm not bearish. I am absolutely astounded at the number of bears out there. And being bearish this year has been a monstrously awful opportunity cost because the bears have, except for maybe a couple of small moves in April, August, and September, and I mean small moves, overall, they've been wrong all year. And I don't mind to say that flat out. I'm not going to hedge. Bears have not had a good year. And to be a perma bear is simply not to understand the general move of the general move historically of the indices, of most stocks that are weighted heavily in the indices. And it kills me that traders are still listening to all this bearish commentary and the drop is going to come and the crash is coming and the Fed doesn't know what they're going to do. And I don't know, all those things as we punch up to consistent all-time highs. That's not a time to be bearish. And one of the things that we talked about in the small account growth class was, what are the mental attitudes you need to grow an account? And believe it or not, bulls make more. I know there's so much said about people making money in crashes. We've celebrated up to my eyeballs. I'm pretty much sick of listening about the 2008. I was one time. What have they done since? What has Paulson done? No knock to Paulson. He made billions of dollars. I get it. But what has he done since? So what I'm saying is bears are celebrated for finding those peaks, but we're retail traders, gang. I don't know how many hedge funds are listening right now, right? We're retail traders. And there's a very different mindset and approach that we use. Quit reading the books about hedge funds and thinking that that's what we do. I love reading about Jim Simons. I love reading about Warren Buffett, but we are trading the now. Yes. So I can't go do the things Warren Buffett has been doing for 4 and 5 decades. I can't recreate that now. I'm not Jim Simons. I'm not running a hedge fund. I'm not running a quant-based hedge fund, but there are things we can learn from them, but the goal is not to emulate them. And that's where I see a lot of traders go down the rabbit hole. And then the flip side of that is, I showed you all August and September results. And I think the thing that a lot of traders are getting caught up in is this notion that they're going to turn a very small amount of money into a giant amount of money. So when I talk about making 37% of an $18,500 account with very little risk to the account through August, and we did just under 50% in September, look, you're going to be barraged by, hey, I turned 5,000 into 500,000 in fall, that kind of stuff. Gang, I know there's a part of our brain that goes, oh my gosh, I can turn $5,000 into, I don't know, $100,000. I'll tell you, the roads are littered with gutted accounts of people who thought they can turn a small amount of money into a large amount of money quickly. Can you have a plan that over time can do it? That's what I'm teaching, gang. What can you do over time throughout your career where you can very systematically use a methodology that's going to allow you to say, I need to control risk first. Then I'm going to go about growing the account. And then I need to rinse and repeat. And that's going to be where you're empowered to say, no matter what kind of market I have, I can grow an account. And, I see a lot of traders wanting to have 200 and 300 and 400 and 1,000% returns. I'll tell you exactly what happens. And listen to me now, believe me later. I've seen it many, many times. You want to turn that 10,000 into 10 million? You're going to have $0 in that account. Please remember, it's not undoable. It just needs a plan that's realistic. And that's really kind of where my message is. You can do it. Just set expectations that are realistic to where you are now, knowing that where you are now is not where you're going to be. You're going to get better, right? You're going to see more. You're going to be more confident, right? But just let's have realistic expectations. In fact, one of my favorite slides in the class was a slide where I said, all right, let's look at your account and let's start looking at defining what expectations are for growth. What are your expectations for this account, where you are right now with the sum of money that you have? And, what would 5% or 10% a week look like? Look, if you take a look at things like what I do or what John does, we're never talking about 100%, 200% return, per month. It's usually, hey, can we put 5 or 10% in an account a week? Can we, at minimum, put maybe 2%? That's a big number for John. When you start talking to traders who've been doing this for 30 years and longer, all of a sudden you see, oh, there's a message coming from this, and hopefully it resonates, which is there's a very powerful methodological way, right? I would say methodology wrong. There's a methodology to growing accounts. I got to check what chromosome that's keeping me from saying that. By the way, talking about growing accounts, crude oil is definitely something we got to put on the watch list because it's getting ready to test the 200. It's getting ready to test that equator. Gold is something, if it's not on your watch list, get it on there. Leave bonds alone, though. I will say for everyone asking about bonds, leave it alone. It doesn't have the structure of account growth. It simply doesn't. Crude oil does, maybe, if it can get above the 200. Right now, I think there's some interesting setups in some of the individual stocks that are going to benefit from not only the crude oil break, maybe through 200, but let's not forget that a lot of stocks that are in energy are tethered to two commodities, both natural gas and crude oil. So if I'm looking at natural gas, we got a nice uptrend here. What stocks are going to benefit from strength in crude and are already benefiting from the strength in natty gas? And those are going to be names that are in symbols overlapping. We'll be in the mastery doing this during the swing session today, which is what's overlapping in FCG, the FCG ETF, with the XLE or even the XOP ETF. So if you haven't done that yet, go ahead and do that. You'll find there's some interesting names that are getting ready to be ready, right? They're getting ready to be ready. All right, what else do we want to focus on? Look, two other sectors that are on the move because of copper and gold. Metals and mining, XME, GDX. One of the individual stocks that's unique to these two groups, weighted heavily in both, is Newmont Mining. So these are some of the names, gang, that we've been talking about for a while, all right? A couple quick questions before we wrap up. Nick says, I was going to ask you the difference between SPY and SPX. Yeah, so the big difference is not so much between SPY and SPX. The big difference is the difference between the S&P futures and the SPY or the SPX. Those two, the three-letter version, SPY, SPX, those are 9:30 to 4 o'clock worlds, while the ES futures or even the MES are 23 hours. So that's the main difference. The weighting, the same. The way in which the individual stocks affect SPY and SPX are the same. The main difference, though, that sets SPX aside is the cost, right? And by the way, there are 0 days to options expirations in SPY and SPX. But what's unique about SPX is the volatility, because the 0 days to options expiration decay, right? It's a depreciating asset. That decay is so much more powerful. And like I said, merciless. The price swings are far greater than SPY. So a really cool set of training wheels for SPX would be to trade SPY, which is something we do really often in the mastery. But then if we want to take that next step, now we're talking about, hey, I've learned how to manage risk. I've learned how to position size. I've learned how to manage volatility and not, veer from my trading plan. I've built the discipline. When you have the discipline, right? Or to use the analogy of the gym, when you have good form, you can put more plates on the bar. And that's what SPX is. It's starting to lift a heavier bar and everything that comes with it, right? What do you do when you lift heavier weights? It's a little bit more dangerous. It's a little bit harder, but you get better gains, don't you? If you're looking to build strength, build size, more plates are going to give you more size, more gains, more strength. So yeah, but there is something to consider, right? More plates are obviously something you need good form, and you need to be, you need to manage risk, right? And then the other thing is, this is what I love about what we have in the room. When you're at the gym and someone's moving maybe a personal best, what do? They have a spotter, right? They have somebody there hovering just over them, making sure that if they can't make it, that bar isn't going to come crashing down on your chest. That's kind of my job. I'm your spotter, right? I'm going to help you put the plates on. And then when you start to lift, I'm going to make sure that, I give you all the things you need to handle that weight without worrying about that thing coming crashing down on your face. All right. So those are some of the bigger difference. It's really a gradual move to SPX. That's the way I look at that. All right, gang, we're just about out of time. If you haven't already, and this is just what's front of mind, we've been getting ready for this class. If you haven't checked it out yet, at this point, what you will have is the replay of all the educational classroom time, which is great because really now you get to watch it at your own leisure. It's available in your library, super convenient. And then starting Wednesday, we have 4 live sessions, one every month, where we're going to take what we did in the classroom and really discuss it in a deeper, more live and active way. So really great, because this is where the fine tuning really comes in. So the class really is, if you think about it, a 4-hour classroom and then 4 individual classrooms coming starting this Wednesday. If you're super motivated to join me for that SPX, that's happening today at 3 o'clock. You can check out simplertrading.com/growth plan. And I will see you all either at the class today at 3 or on Wednesday. And keep in mind, gang, keep in mind, as we cruise closer and closer and closer to that election, this is where we're sitting. There's a lot of hesitancy here. Let's keep our expectations a little bit more realistic to where that resistance is, and some of the uncertainty doesn't mean I can't be bullish. It just means that I'm going to expect less follow through until that trend returns, which it's trying to do. And if you want to see what's going to happen for the rest of this month and you want to trade through this month and into the election with me, remember the simplertrading.com/growth plan. Different packages have different amounts of membership at the Sector Secrets Mastery. So check it out, and I'll see you all tomorrow. Same time, same station. Keep those sectors I talked about in mind. Keep that bullish outlook. Keep that shorter term follow through expectation. All right. Be good to each other, gang.